Good night, traders. Sunday night, so I decided to make a summary of the best trades of the week for the ones that have already see those kind of videos in the past. I'm trying to highlight some of the trades that give us the best risk reward equation for the week. And then probably the best pattern or more clear patterns that we can trade during the day, even trying to figure out how this behaves in the real time action, right? Because it is not, it is easy to to highlight trade with the graph already done, but in the real time always is hardest. So I'll try to figure out when I'm doing this video what is the best, more clear pattern setup and the context aligned to that can give you the edge or the advantage to take a trade and make a good profit on it. So that's the idea for this video. So please, if you have any comments or suggestions, please put it into your comments and I'll take a look and see what we can do better or different next time. Okay, thank you very much for watching this video, and please click the like button and help me to continue growing this channel for all of us. Okay, thank you very much and enjoy the video. Let's start with the Monday, May 6th. And we had at the beginning of the day an opening gap, right? Opening gap up, right, 589. We have a doji bear bar here, but with a huge tail, and then follow through. So 4 bars. So you can. This is a micro channel with a micro gap, so you can buy here in 5, 6. So at the beginning of the day, I did that trade. I buy it here, right? And then we start to be sideways. Right? So when we have this sideways, we have 1, 2, 3 push up, right? And a trading range. So you have an L2 here, L1, L2 in 15. So if you're looking for a double bottom, the double top setup to look for closing this gap, this is a good entry short. So in any here, I didn't mark any there because we have a huge gap, so we can have more sideways. I will have here. So but eventually I bought here looking for continuation, so we must do that. So we must buy above 3. That's normal. Below 5, so we can buy here. So I will try just to after with the graph already done, share some of the trades that I think that were very easy to make for even for beginners, but also for professional traders. So then we have this a couple of legs down here in 20, failing in 20, and then we can expect a couple of legs up also within the trading range at this moment. So we have more than 20 bars sideways here in a trading range, right? So it's a trading range, more than 20 bars. The odds are we are 50% each side, but then we have a huge gap down there up, right? So we have this magnet here. We have the height of yesterday also. So we can think on get a double bottom, a double top in order to get that fee, that gap. But also we know that we have more than 20 bars already, even 30 bars sideways here, 35 bars sideways. So if 50% and 50% at that time, but we should question ourselves why we we don't have bears after 30 bars more aggressive, looking for a new low of the day, or at least testing the height of yesterday. Why this is happening? So for that, if you're thinking, oh well, this is not gonna go down because we have more than 30 bars sideways, probably the bulls are looking for trend resumption. You can buy in this failure here, 20, keep, make the bears trap out here. You can buy there, right? So as I did this trade already here, right? And then wait to try to see if they're gonna fail, breaking out this trading range, and then and trying to break out up. Then the market make a IOI here above the in the but making a new high. It means that odds are that we're gonna have a reversal, but we don't know at this time what's gonna be the reversal. But with those tails up, we can think that it's gonna try to break down a second leg up. Still, this is not enough to get at this 42 because the second leg could be a second leg trap. 44, it's a failure, so we can have consider that an FBO, and then we can go down, but it didn't happen. So that's why 47 is a trade of the day, is the confirmation of the breakout, closing here, and then we have this tight channel coming in. So we have here 1 2 3, we have a wedge here getting into this trading range, measure move up, and then a wedge double bottom, beautiful. That's a great setup, very clear, we see here. So we have three ways to trade this. This is for professionals, I will say. It's just to weigh the testing on the channel line, 1 2 3, and then buying the testing on the channel line. I used to do these trades, right? I didn't do this in here, but I make it above for 73. Above 73, we can the second way to trade a flag is wait for a signal bar. This is not the best one, but the context help because we're coming from a tight channel. So we can get this 73 just looking for the height of 60, right? Or we can wait for the signal bar for the breakout of the wedge bull flag here in 74 and just be happy. As we are considering this a flag, this trading range, we can consider this leg 1 here, pull back, leg 2, and goes here, and put this as a final target. So those couple of great swings, we can anticipate, this swing here, taking, buying low in this trading range, as I'll always recommend. So the day was in the case of we can sell high here in these double tops, so, and we can buy low here, betting on, to have this continuation up. Then we can see 1 2 3, it's a wedge in the channel, so we have very good edge to exit here in 78. I did exit in 80 here in the bar 80. So that was the Monday 6. And for the ones that had patience to wait for the afternoon, price action was great. For the ones that lost some money here, this swing could help a lot. We got swings here from this here to this target 10 points, and from here to this target 14 points. Two couple of great swings that day. Hope you had those couple of good trades in order to be green for the day. Tuesday, May 7th. So another open gap, not so huge versus previous day, but we have a B1 with tail above and B2 inside bar, B3 inside bars, so we can expect trading range in the following bars. And that was one of the things that I mentioned to the people that follow me. So with 3 bars, we can expect trading range price action at least for the first 10 bars, which really happened. But then you can get some good trades like this. 1 2 3 pushes down, wedge bull flag, considering that we have a gap. This is a bar, let's say that way, a breakout, right, above height of yesterday. So we can take this long here, stop below 90, and then try to catch up like one, pull back like two here. It goes there, but it took so long. I don't know if you were able to hold it. I did not, but this could be a good target, right? But then it starts to be more trading range price action, right? So here was were 14 points. So somewhere here you might exit like this bar or this bar, right? Or if you hold it, you can get 16 points. Great swing, but only if you have it here. So if you took this, it's gonna be less than 10 points, right? So it was not so easy. But we see here a couple of things. So it's trading range price action with a we had a we had a spike here, and this gap was filled here in 41, but above 15 was not filled. So we can expect to continue going up. Even here, we didn't touch the moving average. Right? We make a breakout pullback here in a wedge, beautiful. So you can get long here again to looking for the second leg up, right? We can even try to see where it's goes second leg up from here, from this spike pullback, second leg up. Here we have target there, right? So we have target up in order to stay, and then a wedge here. So you see no urgency to get up, so more sideways price action. And then we goes one, two, three, wedge top, double top, so we can go short in 36. So here it's an exit for me. It's an L2 after a wedge. For me it's exit here, and then to see if we can get this target here, this opening gap filled, right? So 36 for me is the first short. But then we have a wedge failing here again, so we can get long again here or here in the 42, looking for this target again, right? So that's basically what I recommend in the longs. But we still have very overlapping here, right? So it's pretty much it's delaying too much, so it means that probably the bulls are not willing to push that price up, at least here, because they were thinking that we were in a good price level at that moment, right? One, two, three, pushes up, get the target in a let's say in a climax, and then reversing 49.50. 50 the best because we have follow through of a good signal bar after three pushes up, and then failing in a high, the previous high that we had. So that's probably the trade of the day, trying to look for this opening gap. So 461 was close enough to get exit there. So this trade makes 16 points there. That's the best exit here, right? Another trade is the 50% of this when we have this um, spike. So we can sell below 52, but it's better to get the 50% here, even in the moving average that's been breaking out, and trying to get this 101 here. So we have this easy trade, let's say, couple of those bars. It's a good scalp, and if you didn't get this here, and then you know it's an L2 here in place, L2 57, so get this 57 to try to get this target here. So those are the main trades that I see this day. It's a day of trading range, but we see characteristics, elements of trading range from the beginning of the day and continuing during the day. We have a midday reversal here, and try to close the gap here. And then we have an H2 to finish the day. H2 stop below 60, a little bit more, you know, below here, to get some space. But this 66 is an H2. It's good for getting at least this target here that we didn't fill. But probably the exit here in the 80. That was the exit that I did, even, right? In that case. So that's the day, trading range day. For the ones that were paying attention, enough attention to how the day was, this is another trading range that probably will be a eventually, and then reverse down. That's basically what's happened this day. When Wednesday, May 8th, I think. Well, now huge gap down. Remember the previous 2 days were gap up and then gap down. It's pretty much what we need to always look for. This gap is always a magnet, right? So we need to try to find a good setup in order to try to see if we can fill out this as a target. So we can have this as a target. But then we have a good one, two, with follow through in two, and bar closing in highs, and the bar three failing in the 60 minute moving average, with a tail up. So we have an inside bar, so you can buy start above that bar, and four is confirming the micro channel. So we have a strong micro channel here, so we have already the edge of the second leg up. That's why they buy above four, right? So those are couple of. This is a little bit more low probability, but this is more high probability trade to have a second leg up for swings, right? So so we expect that second leg up, and then we can buy, thinking on the fading of this L1, we can buy below 9, 8. We can buy the close of 9. We can buy above the 10, looking for the second leg up. And where the second leg up goes? Here. So if you enter here and you exit here, you got 16 points. This 16 is a great exit. It's a take profit bar. We need to exit in that bar. I think that the exit below 17. I always wait for that next bar to exit to see if you're gonna have follow through. But considering that we have one, two, three push up, this is a good exit here. So we don't have to left some more points on the table. I don't remember where I entered, but for sure I will enter above four. Yeah, and above four. That was my entry. Get this here and add here in the tank and get exit here in 17, below 17 or so. So that's the first swing, good swing, and the starting the day. And then we have an L2, beautiful L2. So then we can expect two legs down, right? One leg, two legs down, and we can exit in this H2 28 or even here 33. So you're not gonna get this L1. So you're gonna get this here, pull back here. We feel it, feel it here. If we yeah, you can do that. You can even go short in 26, looking for the second leg down. But when it started to keep sideways, L1 failing, L2 failing here. So that's an L2 fail here, 33. You got long to try to see if we have reversal up and then a second leg up, failing in the low of yesterday. That is this blue line here. So we have a good ledge here, and then this 33 we can try to bet on that is gonna resume the main trend here. And then we have the 35 here, so it's a TTR, right? And we have the breakout in the 38. You can sell the 38, right? Betting on the second leg down that we will have, right? Closing below the low of yesterday. You can sell 38, but this big tail is not looking good, right? And then we have 40. I'll say 40 is a kind of breakout pullback on the TTR. 40, 41 close, 42 close. You can sell any of those bars. It's okay. Trying to look for this. Leg one, pull back. Oh, look at that. It on the tick. Leg one, pull back. Leg two on the tick. so you can get out there, right? And then you have a great wedge, one, two, three. That's a wedge that we're looking for. I remember that I bought this 43 here, put my stop below that bar, and I could get some points here because I enter more, I had more here in 51, and then when I got this, I didn't get so much points here, but could be even better to exit in the second leg up like this 60. I didn't exit, and then I got this reversal below 60. I exit if I don't remember. I don't remember well, but this trade was a waste because I added more here, and then my average price was compromised, was expecting more. For that 66, 67 surprised me. I didn't expect that. Where to to test this low of yesterday, and then it was the low. Yeah, it was the low yesterday, and then this micro gap here wasn't filled, so we still have bull pressure here. So 68 is an inside bar above both moving average, 15 and 5 minutes, and then you can look for one, two, three. It's a wedge here, wedge top, and wedge double top even, right? It's a wedge double top here, getting that target, right? And then you can get short hitting 78 if you want it, but not so much room for getting one on that bar. Yeah, we have room, but not so much pressure. So that was the day. It was a spike and kind of channel or trading range, a spike and trading range. Couple of good patterns, micro channel with failing H1, failing L1 here, beautiful. So you can make the day here. Then we have a wedge, double bottom, beautiful, right? So you can get one, two legs up. That's what you expect from a wedge, right? So 60, failing in 61 is the exit for this wedge here. And then this failure here, so you can get at least to try to test this high of the day. It's more trading range price action at this moment, right? So that what's happened here this day, Wednesday. Was a good day, but that was the day that I finished red. Thursday, May 9. So quickly, we're coming from a trading range on the rest of the day yesterday, and then B2 is a two bar reversals with a good close below. You can get short there and get an scalp, or even you can even try to see if we can get more from that spike, but at the end you might not looks uh, you know you might not like bar 4 failing on the low of just the previous day even, and close to the 60-minute moving average. So it's an exit at bar 4. But then we need to wait because it's probably a trading range, right? So 5 is higher on the trading range, so you cannot get the 5. But 5 left a micro gap there, micro gap above 4. So that's why 6, you can buy that 6, thinking on the micro channel and the bull pressure that is and that we have an evidence when we have a micro gap of 4. So trading range behaviors trends to close the micro gaps. When you have micro gaps unfilled, and it's something that is happening in the sequence, Outlook say that we have bull pressure, at least in this case, and then we can think on patterns like this macro channel, 3 consecutive bull bars closing in highs. This is the last two, and then think that we're gonna have the edge of the second leg down, second leg up in a 60% of the time, at least. So we have 5, 6. If you don't like 6, as I didn't, you can buy even 7, right? It's a great bar. 3 consecutive bull bars, great. So that, and this time we have the edge of the second leg up at least in the 60% of the time. So then you can buy below 9, you can buy the close of 10, you can buy this 11 and look for the second leg up, and then guess what? It's got at the tick here. So if you get it, you get it from here below 9, that will be a good one. Then you got 16 point or so there. But we still have the third legs up, so you can even wait and get out even with 20 points. I think that get it 20 points somewhere here. Okay, wedge, double bottom. Here we have a high of 5. 2 days ago here, right? So it's a bet to try to see if we're gonna break down there. Probably if we have a wedge, we fail on an acceleration up at that time, right? So that's something that probably we can think on in order to hold a little bit more. But then it failed here in 26. It's a failure breakout of this high. So you can get short in 26 looking for two legs down after a wedge. We have the two legs down here, 1, 2, and then an H2 bull flag. We can buy in the close of 30 as I did, or we can buy in the close above 38 too, looking for trend resumption, right? And then we have one bar, two legs up, even 3 legs up here with 43. It's a wedge double top. Probably this inside bar E. I would say that it's a little bit early to sell below 45, but I sell at the fade is 48 for sure. Okay, at this moment it became a TTR here, right? So we see here it's a trading range, so we sell high as I did here, right? So double bottom here, just close in the close of 43. We could have bulls disappointed and getting out like this, right? And then by the close of 47, bears disappointed after these bars, and then getting out 53, 55 or 59. And then we have a great here breakout on 62, 63, 62, close it above 43. So that's the first signal. And then 63 is an inside bar closing above, with the highest close. So this is a breakout. So TTR breakout of this. So we can get this TTR here breakout to get this measure move up. This is the first target. And then a beautiful wedge bull flag here with double bottom. You can get into the moving average. You can get it above that 73. You can get it above that 76, or even you can even enter in the 78. That is a confirmation of the breakout and the wedge bull flag breakout. Targets, we have this TTR measure move up. We have 20, 30 up. We have measure move of yesterday trading range up. This trading range up, right? And that's it. Those are the trades. One thing that I'm gonna tell you, the day you can think, wow, what's a tricky day, but think about it. Think it in this way. If you're a trader like swings, one of the things that you need to identify always is a technical stop. So bar 3 is your first technical stop after 7, right? Market always in long. So if you buy here with stop in 3, you were not hit it. Then we have a 40 make it the second leg up, right? New high. So it's technical, became a technical stop here, right? Was not hit it. Wash, 2 legs up, 2 legs down, and then we have a double bottom. Once we have that double bottom here with 58, with 38, this 30 becomes technical stop when 43 makes a new high. It was not hit, right? So if you bought here, you put your stop below 10, was not hit. If you bought here, right, and right after 43 and you continue holding, put your stop below 30, was not hit, right? 47 is not technical stop at this moment here. It's not. But once we have the TTR confirming more than 10, 20 bars here, just almost 20 bar, this is a technical stop because it's a TTR. So we will have failure, which we can wait for failure. But it doesn't make sense to use 47 if you have 37. So use 37. That's more because you need to get some space in order that in case of TTR, we have sometimes some overshoots down, up, and then came back uh, within the limits of the TTR. And then when we have the TTR breakout here, 59 is a technical stop, was not hit, right? And then the wedge here, wedge double bottom, once we have the 678, becomes the final technical stop of the day. It was not hit until you get the target. That was something that you always needs to take a look when you are a trader looking for getting some swings, good swings. Okay, that was Thursday, May 9th. Last Friday we have a interesting day. It was not easy day, right, for most of the people. I'll try to explain something here. First of all, we have big one, good good bar closing inside. So it's okay to get long. Of course, we have a huge gap here and follow through, so we can expect a second leg up. But then big one didn't get the measure move of that bar, and then we have a reversal in seven. So trading range in the opening. Trading range in the opening. So these guys that are buying him in one and two, they are trap out. So essentially, we can expect that, at least when tested the B1, we can get more bulls trying to exit in the 50%. Probably here they exit in the 50%. Let me see. They started to sell here. You know, look at this. So they're trap out and then they exit here in the 50%. So that's one of the first that when we are trading, we need to take a look. So what the bulls trap out are doing. So you can set a limit order here to sell, as we have a huge gap here. So we can aim this gap as target, selling the 50% here. Right? So bulls trap out here with this 7. They exit immediately in the 50% here when tested in bar 8. That's a confirmation that the day that probably we are right now always in short. Despite that we're in a trading range, so you cannot sell below 8 because it's a trading range now. But what we know is that we have a gap here, and then we have the proof that the bulls are getting out at the 50% here. So now the market with follow through will be always in short below 10. That's why below 10 is a good entry short, and then we have the edge of the second leg down, looking for this target. So you can enter in 10, right? Have good tested the moving average of 15-minute moving average, so it's normal to get this pullback here, then goes to the moving average, 5-minute moving average, and then you can sell in the test of the trading range, right? This B1 bulls getting out break even. That's why the this bar here, and then we have another measure move down, that is this trading range down, where the bulls of B1 will eventually re-enter, will take profit there, the ones that they were setting here. So this is the target. And then target was with 17, so 17 is a good gift to exit. So if you get in 10, 17 give you 11 points. You get in on 15. That was my preference. Close to 15, or even here, you get 16 points. That's the best trade here. The beginning of the day. Probably the best trade here for the day. Right? Then we have one leg down, second leg down, kind of climatic, right? And then we can expect a third leg one. Even, it's not a perfect wedge because we have a major support here at the left. Because if we didn't have support, probably we would go lower to test this 60-minute moving average and get a wedge here. So you have the space in the channel line now down. But then we have these two bar reversal in 28, so it's good to get long in 28 after a major support. And then the 32 is an H2, right? After a wedge. So we can expect starting 32, two legs up, like we did, right? Closing this gap on 16. It's normal, so 42 could be the could be a good start, even good short for eventual bear trend resumption, right? It's 42 here. So then we have one, two, three, and a beautiful wedge double bottom with 31. I took this trade here. This is one of the best, let's say, setup that we can see. We are in a bull trend in the main trend, in the 60-minute chart, in the daily chart, and then we have a wedge here, couple legs up, and a tentative to resumption. So this is an Merton reversal long here. And then we see that it's really weak in three legs down and a double bottom. This is amazing because you have 31 left. You can use that as a reference. You can use this channel line and you can buy as I did pretty much in the minimum of this bar here, right? So that down you can buy the 52 or you can buy the 53. 53 is a little bit high versus the trading range here, but the 52 is amazing. So you don't have you don't have reason for not taking 52. Okay. Then it's a micro channel. So if you see you see some bars there. It's a micro channel, but so weak. So we might have second leg up, but not so strong because it was so, overlapped here. This is an L1, so I will not take an L1 there, even making a new high versus this. So we can expect a second leg up here. So we have the second leg up at 66, double top, and then a tentative in 67 to go down. This is the first tentative and fail. So starting here, this is a spike and then a channel. 1, 2, 3, wash. So exiting close to 77 was the best option. I did it there, right here. I did exit here. And then 78, you can take it to try to make a final scalp for one-on-one of that bar and didn't get it. But probably did get it in the post market, right? But that was the day. We see that the 78 also makes another pullback on this bar one, so it's a swing point here. So when we have this swing point here, we need to take a look tomorrow or Monday to see what's going to happen when the price is coming here. Right? I'll say that here above is going to be a breakup up, and then if we have another double top here in this area 5250, we can get down even to break down this trending line and go down. So that's the Friday. It was not an easy day because we didn't have good entries in order that we can scale in and get this point, but it was 11 point, good 11 points here. Or even from here, we have 9 points or so. This is a bad signal bar, but it's enough to, 10 points too. That's it, Friday, the 10th.